All right, all right, all right. Oops, let me do this again. All right, y'all. Welcome back to a brand new review. Shout out to you guys for rocking in here. I know it's a Sunday evening. A lot of you guys typically are, you know, taking today off, and just relaxing. So shout out to y'all in here putting in the extra work. It means a lot, right? For yourself as a trader, putting in the extra time is what's key in order to really get yourself to where you need to be, if that makes sense. Um, and yeah, I mean, the 100 guys the 100 people in you, or excuse me, the 100 of you guys in here. That's what it takes. It takes constant effort. You guys know, for anyone in here who's ever succeeded, say any other facet of their life at all, you know how much work it takes in order to get to somewhere you want to be. It's the same thing with this. Effort is what matters, and most importantly, smart work is what matters as well, right? You could work hard, but the thing with trading that trumps every other kind of industry, is that it takes smart work as well. You can't just come in and put in a certain amount of hours and expect to see results. You have to remember you get paid off your decisions, and you get paid off how you think and your IQ in the markets. So coming in, kind of gonna be reviewing Friday, and then what we could do is we could go over any questions about the entirety of last week, and kind of go over that. I had one scheduled for Friday, but thought I would kind of do it together with the giveaway I was going to announce on like tonight at 8 p.m. We also do have a class next week, which I'm very excited for. That will be pretty exciting because that will be just kind of me going over the entire model, specifically for 2026, which is very similar to the past couple years, but obviously it's had its refinements. And yeah, we've had a killer year this year, clearly. Inside the Discord as well, where we've had periods where we've skidded really well, and most importantly, we've had periods where we've consolidated or maybe seen a bit of drawdown. And the important thing with that is you guys have been able to see exactly how I've been able to handle it as a trader, which I think is by far the most important thing. I think when you come into a Discord, it's not just about solely winning and seeing a person win. It's about losing as well and seeing how that trader takes losses, because you want the full 360, right? You want the full experience, and we do that in here, so which is good. And for Friday's kind of review, we'll be talking about the one loser that we had, which was a half hour loss, and kind of go over the session for what it was. So coming into the session, for my bias, it was pretty obvious. I was pretty bullish with price specifically starting off onto the daily and how we were printing. It's clear that sentiment was looking to push new consistent highs. You guys could see ever since that new week opening gap that we had weeks ago. It might be a month now since that happened. I don't know. But we had some Trump news, Iran news, which gapped on the market. We saw ever since we started seeing price come up and fill that new week opening gap and trade past it. It's been clear upside since, and we've seen large ROIs in the past, specifically for April, in our trading because of the fact that we had seen markets start to follow through. And specifically for me, as we see price keep installing new highs, keep creating new higher highs in the market, there's no reason for me to look to play downside. And I made this clear on Friday. If there was going to be a trade that we were going to take, it was going to be upside because my interest in downside was not there. Reason being, higher time frame is clear as day. Interested in upside. For me, when it comes to pivotal takes, you guys know this. The two main components are price and where we put in a set high or low. So for a bearish reversal in the market, what we're looking for price to do is put in a significant high off an area of liquidity, which we do not have here, right? Every time we create a new all-time high, it's a new high where we have to use psychological levels because there's no historical data clearly since it's an all-time high. So for me, it's very hard to kind of just go based off like a sweep of a high of day because there is no historical data behind that. I truly believe in the factor of higher time frame liquidity historically that we come up, take, boom, and react off of. So we did have a session where we did play a short. That was because we had a very bearish New York Open. We had seen higher time from arrays get kind of invalidated, and then we had our entry looking for a simple continuation into an overnight low. However, since not since, but for the majority of the past month, I'd say we've been relatively entirely bullish. Right, we've been taking upside trades only, and clearly so. I think it's been very valid, and so So for me specifically, like I said, on the daily time frame, I was very bullish because of the fact that we were consistently seeing engulfing daily candles. Right, you take the sample size on the higher time frame, and you look at the past, month. Let's do it. Let's do it. Right, one bearish, one, two bearish, three. This is 1, 2, 3, 4, 5 bearish candles that you see on the daily time frame. But if you go all the way from down here, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14. So essentially the last 20 trading days, which would be a month exactly, because the weekends are 2 days, and typically a trading month has 20 trading days. In the last month, 14 out of the 20 days have closed out green. That's significant for you guys to look at, because when I see something like this, it's very hard for me to look to play the other side. The only way I would look to do that is if we saw price be very decisive and follow through, like we had that one session. I believe was it Thursday, Chay? It was Thursday, where we had that short. I'll briefly kind of talk about it, and I'll go back to it, which was a day which was pretty crazy. Because I think we had 2 winners, 2 losers that day, which is unlike us. But you look at the trade that we had for that Thursday. This was the first, I think, short attempt that we've had in a very long time. And again, the reason we say that is because you look at that daily time frame with how those daily candles have closed out. Mind the fact that we are at literal all-time highs, but just looking at the daily time frame, this should tell you how engulfing or how much interest price has an upside in the stock market at the current state. So for me, naturally already kind of having that downside sentiment is very hard, because when you play with sentiment here, trading upside, it's a lot easier just to kind of capitalize off, if that makes sense. Then going down to the 4-hour time frame, you could see it's very simple in the way that it's pretty much the same thing, where you see price consistently engulf, you see price consistently be one-sided and upside, and you see price consistently have much more bullish displacement and closures off these candles than you do off the bearish candles, if that makes sense. So kind of coming into the open, for me specifically, leading into that bullish narrative identified through higher time frame, what I wanted to see price do off the opening range move was either come down here and grab an area of liquidity like a London low, or see price come up here and take out Asia highs. And based off the reaction, we could look to play narrative. The reason, again, I use the opening range moves time and time and time again is due to the fact that when I come into the New York Open, historically for me, as I found for myself as a trader, when I trade right off the open, I feel like most times it's gambling. The reason I say that is because a lot of times you don't have the actual real move happen until past that 9:30 a.m. open, if that makes sense. So for me specifically, waiting for an opening range move, which was typically an area of liquidity being taken out, like an overnight high, overnight low. What that sets is that sets clarity in the market. You know exactly what you're looking for in price and what it wants to do, and it also gives us a great tool in order to be able to recognize if conditions are good or not. A lot of times, chat, when you guys see us not take trades in a day or be very cautious, it's due to the fact that price through New York trades within overnight highs and lows. Whenever we see price trade out of it, typically I like it a lot more, because you're seeing decisiveness in the market, right? Decisiveness in the market, which is what we always want. Even if it's a range day, even if it's a continuation day, you want decisiveness in the market. So with the opening range move here, you see price come up, and you see price take out our London high, and then we see price take out our Asia high within the same 5-minute candle. From here, very clear that upside interest was there, because not only do we see the opening range move initially be bullish, but we also see it hold. This 5-minute candle, as engulfing as it was, should clearly tell you how much interest price had in higher. So you look at the 1-minute time frame, you see price also, trade at a very bullish state, consecutively being bullish. From here, I guess the only challenging part with price being so bullish is the point of retracements. We did not get that in the morning. We did have one idea in the morning, which we did take a beautiful, or excuse me, we did mark up a beautiful long, which never came into play. So if we go down here, we could see this is the first idea, which was a simple 2 1-minute gaps combined inside of a 5-minute bullish for value gap. So we had a 5-minute bullish for value gap paired with a 2 1-minute gaps here. Lance, so why use 2 1-minute gaps when I just use 1 1-minute gap? Well, these are 2 inefficiencies in the market, 2 imbalances. And for me, as we always talk about, which are the best gaps to always mark out? It's typically gaps that are displacive. And so for these 2, these weren't very displacive, but they did have voids. So what I did is I simply marked out 2 inefficiencies and kind of combined them into one, acting as if it's one zone, which is still valid, right? If you go to the 2-minute time, if you go to the 2-minute time frame, these 2-minute gaps become into one. So we see price come down here, and we see price initially, look like it could potentially come down and retrace further on into this 1-minute gap. but it did not. We saw price come up here, and unfortunately, we saw price see higher almost right away. And then pair that with me having a migraine in the morning, I was able to simply get off. Had to take care of my migraine. Came back to PM session. We did end up start to consolidate after initially putting in that high through that opening range move, or the open move. Our high of day was instilled at around 10 o'clock a.m. We did see price PM wise come up here and coming into lunch hour to create a new high, but we didn't see much follow through past that. However, my interest was still higher. I said in the stream, if we were going to take a trade, it was only going to be upside, and now obviously you guys know through the identification in our bias. And then we ended up taking our first and only trade for the day, which was a long. It was a potential PM take, bullish S&T with ES off internal low, eyeing high day as target, entering off a 1 minute bearish fair value gap into a bullish bullish inversion fair value gap. So you guys know, bearish gap, we come up here, we see a closure over, we violate that gap now flips and turns into a bullish inversion fair value gap. We then end up seeing price come up here. Unfortunately, we stop out, but first things first, we see price come up here and commit a clear entry model, right? We see clear confirmation where we see nice displacement come up here and we see a good closure. So with this trade, although it was a loss, chat, I was very content with this trade being a losing trade. Reason being, I really liked the setup, and this was a very technical setup. So the setup factor with this idea, is after recognizing higher time frame and how bullish we were in trading all-time highs, literal all-time highs, and with the opening range move, paired that up, I think it was very fair to assume that we could see higher draw. I guess the only challenging part with this trade right here is we ended up coming into the trade, or coming into the PM session with already having a move in the open. The idea behind this trade was a simple SMT occurrence with NQ and ES, as NQ created a higher low. You could see that our 11 a.m. low on NQ was a higher low, whilst on ES it was actually a lower low. So we see this 11 a.m. low, boom, come down here, ES came down here, swept this low, whilst NQ did not. We then see price propel back up, and we see the trade get offered. The idea behind this trade was a 1 minute wick low, aka swing low. We could have used our model stop, which would have been right here, right, the fair value gap candle wick low. That could have been the factor. That could have been the stop loss for this trade. Did not really matter. We came up here, we saw a good closure over. My break even was a 1 minute wick high, really close to that take profit interest, which was high of day, aka all-time highs. We see price initially come up here, and with good confirmation, our timing, I think, was pretty decent off the start. But then we see price start to consolidate, and eventually we come back down here. So I guess the unfortunate trade thing with this trade, which we could kind of refer to and look at, is the SMT, the divergence occurrence in between. So before we took this trade, it was clear as day that NQ was obviously the leading asset, as we had seen the SMT occur, and we had seen NQ propel into this inversion for value gap pretty nicely, a little bit better than ES. However, the moment we took the trade, we see ES start to hold a lot better. As you see, right, our time of entry on NQ was, I believe, right here, at 1:16 p.m. Eastern Standard Time, and you see price for the most part not really do much after. But if you look at ES from 1:16 p.m. Eastern Standard Time, 1:16, you see price being a bit more engulfing here on ES, right? A great way to tell as well is off the retracement that we ended up seeing price commit. 1:16 candle, you could see that price was, your entry would have been here, and then you see off the retracement in this move that ES never came back down into that 1:16 candle entry price, whilst NQ did. So a bit unfortunate. I will not complain about that too much because it wasn't anything significant. But we end up seeing price curl off, and we see price come back down. What you can say about price PM-wise is it was very range-bound. And so for us specifically, I think we just got caught up in this range. This, however, is a good loss that I'm willing to take all the time. It was a half-hour loss, but it's a loss I'm willing to take all the time because it was a good technical setup that I felt, I could take most times. Or if I ever take a trade and I look back and I'm like, okay, this is a trade I wouldn't typically take, that's a bad loser. In my opinion, this was a good loser because of the fact that, again, this is a trade I feel I take all the time. Just did not pan out. Price was very range bound. I guess we could have been a bit more patient here, not taking this trade, maybe closed out for the session break even. But again, I was very content with this loser. From there on out, what we did, chat, which is important, is after taking this loser, we had recognized conditions and we left it for what it was. We did not revenge trade. We didn't do any of those emotional things, right? We simply stood grounded. And although we took a loss and although we're red on the day, we don't get phased because we know at the end of the day, as long as we have proper risk management and we follow our system, it's always going to work out. Our week still closed out very well. We still did a good job overall in the week. And you don't want to ruin that by simply being greedy or wanting a bit too much on a day where price isn't offering that much. So that's pretty much that. And so, yeah, if you guys have any questions, let's get right into it. How much are that close? I still haven't calculated it, to be honest. We're definitely green though, for sure. Like P&L wise, I'm green on the week. So there's that. I don't know exactly. I could probably base it off just my P&L. I know my exact risk per trade. Um, so I'm not sure really, but that long PM wise on Thursday really clutched us up because chat the first couple of days of the week, if you recall correctly, were compound days where we were up like a little bit under an R each day. And then that Thursday take was really a take that put us over on the week. How we go to the current week? Any comments about how to affront this week? What do you mean? Can you be a bit more specific? So it looks like we're going for that new week opening gap fill. I might like to take, or excuse me, I might like to take a long off it if we prevent or offer. Why sometimes you enter a trade before a confirmation? For example, you're waiting for a 5-minute close. No. But here's the thing. I know we don't do 5-minute closures. We always do 1-minute closures, right? Our confirmation is always the same, which is a 1-minute closure, right? So there's your answer. If you know the model entirely, you know that we enter off 1-minute confirmations through 1 minute, and 5-minute entries every single time. What is considered PM for you? I think you have your lunch hour, then anything past that is your PM session. I think people either start it from 12 o'clock or they consider it from 1 o'clock. But either or works. What's the game plan for next week? I'm going to wait out and see how we kind of come into New York Open every single day. We used to have a game plan channel in here, but I kind of just closed it off and I put my insight for our game plans on the commentary channel, and then also on our live streams. But for me, I'm going to look how we trade overnight. We have this new week opening gap, and I think based off how we trade off this new week opening gap will give us a good idea behind what Price wants to do. It's too early to tell, in my opinion, for tomorrow. But it's clear as day. We're still trading at all-time highs. So right now, if I had to assume, obviously you naturally lean bullish. Do I hope we see a bit of downside so we could work off historical levels? Yes. I don't want to see prices consistently create literal all-time highs every day. I wouldn't mind it because we'd probably be able to capitalize. But I'd prefer maybe a move down to be able to offer us an opportunity to work off levels again. Shout out to the 140 guys rocking in here. W chatters. If the trade keeps working, you hold till before 5 p.m. Eastern. Yeah. Always. 100%. Yeah. Unless we close out, yeah, for sure. I always hold my trade until 5, typically, on my personal. For sure, Brody. Thank you for the kind words. How would you scale from 0 with prop? Like, which ones, how many counts to get to start and finish? Well, it's relative for every single one, every single person, because I don't know what every single person's capital stance has, nor do I know their skill set. But if I had to go based off me specifically, I think there's two different things with prop firms. There's scalability, right? You want to scale, and there's just good rules. Now, I think if I were a new trader where I would start from 0, I wouldn't be focused on scalability yet. So what I would start is I would probably start with Lucid, because they have probably the best rules in the industry. In terms of accounts, they have variety as well. So probably Lucid or Tradeify, maybe even TopStep. I know TopStep's been kind of downtrending, but their rules on their funded accounts are very simple. So I'd look, if I was a new trader, I would start off with a firm that has very easy rules, because when you just start off, or when you're less experienced, it's already hard enough to trade, and imagine trading on rules that are very hard. So that's probably what I would do. And then over time, as you get consistent payouts, I would probably reinvest and then look to scale into bigger firms like a take profit trader, like an Apex, where you have a lot more upside. So on the personal accounts, you don't really set a sell limit at any targets. Rather, you just let it run and set trailing stops, like you said. Only close if it rides. Yeah, typically, ideally, the only way I would ever close out is if, how do I say, there's typically never. It's typically, yeah, it's typically just me holding and trailing because I found historically through my system. Here's the truth about my live account chat and trading. There's gonna be periods where not much happens at all. There's gonna be periods where my portfolio is just consolidative. There's gonna be periods where I'm in drawdown, but I thrive the most when the markets thrive, if that makes sense, right? You guys know how the markets operate. I mean, look at this year specifically, right? First couple months of this year have been hard because we've seen first couple months were just price up down in a range. So are my personal accounts, right? I was still doing decently well because I was able to use the model to my approach, but nothing like how I did in April, right? You guys saw how I did in April, and the reason I cooked up the way I did in April is because the markets cooked up, right? Markets saw a large follow through, and so in that duration, like in April, where markets follow through like that, all I do is I simply trail and I let price allow me to capitalize more and more and just trail my stops, and that is able to gap me over through a duration, right? So for example, January, February, March, those first 3 months, I probably netted around an average of anywhere from $100 to $2,000 a month on my live account. And then April, boom, $2 million, $3 million a month, right? That averages it out. People don't like people. I guess when they trade, they think it's, oh yeah, you come in and you make $10,000 a month consistently. It's that easy. No, chat. You guys know this. What the markets, there's inconsistencies and there are consistencies. The markets aren't going to be perfect all the time. And so for me specifically, the reason I do what I do in terms of trailing my trade and just allowing it to run is because in the durations of the markets following through, I simply capitalize the most I can. The best traders in the world, what they simply do is they know how to handle drawdown the best and capitalize the best. And for me specifically, what I found is when I let a trade go and keep doing its thing, I'm not capping myself as a trader on my personal account. I'm simply capitalizing more on the move. You said the other day when you go BE, you base it on the model entry, not the actual entry. Do you have any other things that like you do that you have mentioned before? No, not really. That's really it. I guess what I've mentioned in the past as well is I always have my take profits. So if I ever long and I have a TP in mind, I always have it a tick under just so I could void the potential of equal highs. That's maybe the one. But I've mentioned that in the past. There's nothing else like everything I do on live or like I teach, I do pretty much. But me mentioning like using a model stop, that's more so for chat. Because for me, I typically always get the model entry, and most guys in here, like you guys, once you're like once you know enough in here, which what typically just have to watch a couple videos. Once you understand how we operate in here and watch a couple lives, like you know exactly when we enter. If you know model entry, you're typically break even at the perfect spot every time, if that makes sense. So I'd say for people who are like newer, if you don't know what model entry is yet, I'd say just specifically have your break even place the model entry. That way, if Lanto, sees trade hit TP, but you go break even, there's no excuse. 28 picks 50K counts down 170 per week. Will trade what is your macros risk your trades made risk but I can get 40 Yeah, I think was it you that asked the question last week? But I think someone asked in chat about risk per trade. I think just it's important to make sure that you follow all the trades because if you follow all the trades this week, you're thriving, right? You shouldn't be down at all if that makes sense. If you followed every single take, you're definitely thriving. So that's mainly it. How do you confidently trail your stop on large moves like that? I think it's just markets just have tendencies. I've just been trading long enough, and I've realized that when the markets go, they go. When they consolidate pretty hard. It's just markets are very extreme typically, and so in conditions where we do consolidate, I think that's the one thing I do have to work on as a trader, chat. Even for myself, like calling myself out here, I think it's the identification of good versus bad conditions. If you guys go back to, I think March was it, chat, like the month before April, or maybe a bit before that, we had durations where I had set take profits that were large and relative to what the markets were doing. So there were periods where the markets were really range bound, but I had take profits as if I'm looking for continuation moves, if that makes sense. So I think it's just that adjustment. And I'm naturally like, for me, my favorite type of trade is just obviously a continuation trade. I like capitalizing on trend. I think that's the most successful way you could operate in the market. To those out there who are successful off pivoting and catching reversal trades, in terms of just extreme pivots, fair. I like reversal trades too, but in terms of probability, your probability is always there through continuation in my eyes because you're riding market sentiment. But yeah, I think that's just the adjustment. That's a small refinement. Is okay, yo, Lanto. When markets are ranging, take range trades. Have realistic range take profits. Instead of riding and trailing your trade all the time, maybe in these type of conditions, look for a set realistic take profit and take your profit, as opposed to consistently having one approach in the market in terms of take profits. You need that versatility, which I talk about, which is key. So like, chat, if the markets go back to ranging, you'll see me, instead of taking trades that are 5, 10, 15, 20 yard plus, you'll see me consistently go for base hits and look to take a TP1, a TP2 type of trade, if that makes sense. But since we're thriving now and the markets are really expansive and seeing massive follow through, as we discussed, you're gonna see me operate in a way where I look to let the trade run out, right, and pan out. In your class this week, can you over? Yeah, I got you. What's the max payout on 100K on Apex, and how much should I aim for? I don't know what's the 100K payout? I forget what it was. But just be comfortable with what you can afford to lose. Like if you can't afford to lose the account, you shouldn't be trading them, and if you do, just downsize and take your time with it. I think Apex markets the narrative. Oh yeah, get payouts in 8 days or 5 days, whatever it is. Chat. Whenever you see that, that's them just trying to force you to rush. Never rush. Take your time with it. Always, chat. Always, always, always take your time with everything. Especially if you have less capital, and you're more inexperienced. I think taking your time is what's important. I mean, you look at my guy. A great example, and I'll pull it up right quick. I don't know if he's in here, but my guy right here, a beautiful example, is his name's Toasty Trades, and you could see he has posted his calendar consistently, kind of his progress through the duration of a month, and you can see, chat, like he's not aiming for thousands of dollars a days, right? He's compounding and he's taking his time with it, and he's able to get 4 payouts last month, chat. 4 payouts, right? He made a shit ton of money simply compounding, right? And I think if you're at the position where you don't have the most capital, you could do this too as well, right? You just got to simply take your time. Remember, P&L, it's all relative. What you see here, it's all relative. He has a process which he follows, right? That's it. He stays patient. He takes his trade when it's there. The only difference between him and me is I simply take more contracts per trade. That's literally it. Remember, P&L is the result. You have to focus on your process. So, hey, Lance, I just want to say I appreciate everything you do. This group, you're not in here. I'm going to take a beautiful, my man. Love it. Love it. Thank you for the kind words. Appreciate it. In your model entry, you said in reversals, shift focus on inversions. It confused me. What does that mean? Okay. In terms of the one I posted, yeah, I think the best type of entries when it comes to reversal trades probably would have to be inversions. For me, in terms of my favorite, because here's the truth about reversals. At least for me, I prefer having reversal trades not offer much of a retracement, if that makes sense. So what I mean is, so say you have like a low, and you say you see price come down here, and say you see price take out that low. What you're looking for price to do, in my opinion, what my favorite thing is where price comes up, and we see price come up and offer one retrace at most. But, and how many times have you seen previously in the markets where we come down here, take out a significant low, you assume we have a reversal, but then we slowly glide up, offer a ton of retracements, and eventually just come right back down. I think the most clear way to identify reversals in the market is when you see a liquidity area of interest where price comes down, takes it, and then displaces back up in the same speed, if not more aggressive, than it came back down, if that makes sense. And typically what that means is typically you don't have many you don't have many retracements in the market, right? Because if price is very bullish, right, typically you will just have an upside direction. But if price isn't that bullish, you'll have much more retracements, much choppier conditions, if that makes sense. So I'd rather prefer this over this because of the fact that the likelihood of us just retracing and heading for lower is a lot less likely when price is much more bullish and seeking a lot more continuation. So your entry being inversion entries, I think you're like, excuse me, you being able to capitalize off inversion entries here is a lot more likely than looking for a retracement, if that makes sense. JB, I don't know. You could ask him. Add him in here. He's in here. W Maz. Yeah, you're right here, by the way. Yeah. This is it. You're right completely here. The only like decisive thing I need to do while I'm gonna trade every time is probably my trail stop. Everything else is always predetermined, which I think is the most important thing because it simplifies my approach. I don't need to worry about my stop, my TP. I don't need to worry about anything but simply trail my stop. This is definitely important. How is your plan when you need to pass the evals? How would you recommend to do that? For me personally, if I'm being honest, I just size up and I take the risk. If I blow the account, if I blow the account, that's because I have the capital and I also believe in my skill set, right? If I blow, typically on evaluations, I give myself a couple R at max and I simply take that for what it is, just because I know even if I blow it, I'm likely going to pass the next attempt and get funded and then get the payout to kind of, recover the loss and obviously be profitable 10 times over. High and low resistance, or let me continue off this real quick. If you have less capital, I just say take your time with it. Just take it a simple approach. Again, there's no need to rush in the market, chat. I will always be here. The markets will always be here, right? The markets will never be closed unless the fucking US got nuked and we had to close down, right? The markets are always gonna be here. I promise you that. So just take your time with it. High and low resistance environments for sure. Let's up trades. What's your favorite song to get locked in before trading? I don't have a favorite song to be honest. I don't know. Um, I don't. I don't like to listen to any songs because I think if anything, I think it riles me up emotionally and it slightly makes me want to almost need to take a trade that day if that makes sense. So for me, I'd probably just listen to nothing, or at max, I'll just listen to like lo-fi music, some calm music. Because if you ever like get riled up and feel like you need to succeed today, which is AKA take a trade, and for most people's head, it's like you're almost forcing a trade. Prior time from analysis, do you base the analysis on where you predict the price will go? For example, if price was near a high, and or would you predict it take out the high and then therefore be bullish? No, I'll naturally have my insight of where current price is before anything. So I'll only have a prediction if I already have my insight plugged in and I expect that move to happen. So if I'm already bullish and there's a high there, right, then I'll assume that high will get taken out. But I'll never just assume a high will get taken out without any set bias, if that makes sense. So I'm always just reacting, if that makes sense. So you have compared the P&L on your props that are almost always TP at target one and see if that does better than your personal or rather underperform much more simply due to the windfall periods that letting traders run allow you to get. No, I mean, I don't know what's happening to my forehead. For me specifically, I think I don't know if you looked into the risk management channel. There was a duration in this Discord where I would include set R based off prop R and then personal R. But the video that we have in here, the risk management video, excuse me, is a very good video. It kind of goes over my set system per each way I risk and I take profit on each type of account, if that makes sense. And I found honestly, I mean obviously you guys see my personal account thriving a lot more based off R. And I will say trading your own personal income, right, or your own personal money is a lot better because there's no restrictions. But more importantly, my mindset when it comes to trading my personal account is different to when it comes to trading a prop account. Most props, what they offer is they offer consistency rules. So you have like a cap on how much you can make per day. When that's the case, you don't need to be capitalizing on tremendous R. What you can simply look for is for compounds. So my mentality, my approach, my model, my system is the exact same on both. The only difference is when I enter a trade, I am completely content on my personal account with how it goes, and then B, say we're in profit and we see price glide up and we see price follow through extremely, I'll let it ride. On props, I don't do that because you don't need to. And if you want to do that, then you simply just size down. So like say on a 150K Lucid account, straight to funded account, your consistency on payout one is typically $1,800. You can either risk, $1,000, look for a 1-to-1, or like risk $600 per trade and need a 3R to cap out on the day. Or if you want just kind of ride those big trades that are 5R plus, you just simply downsize and your risk be a fifth of that 5R, if that makes sense. That's kind of the approach. So it's just compounding for props, and then for personal account, I specifically just look for trading the way I do. Like chat, my win rate on prop accounts is significantly higher than my personal account because there's trades on my personal account that I take that are high risk that I'm content with taking because I know at the end of the day, the moment I'm content because I don't need a high win rate on my personal account, right? My average R compared to props is significantly different because on props I take at TP1, on personal I don't, if that makes sense. So yeah. Helito, could I ask how you do, or how do you know when not to take the first presenting entry? Example, on Friday there was room for shorts initially, but you didn't take off the initial for value gap that was below the session where we had pre-market selling. I don't get what you made when they take it for long. Good question. Up here, I've talked about this in the past as well. This is a large thing I talked about. I think late last year. For me specifically, chat, what I look for when it comes to reversal is displacement. That's the number one thing in both ways. What I'm about to say: one, displacement in the gap that we end up taking off of. So you compare to this gap as opposed to this gap, which, by the way, you marked out this gap wrong. If I'm, oh no, you don't. Excuse me. This gap versus this gap in relative, you see this gap not be anywhere near the displacement as opposed to this gap right here specifically. And two, kind of going back to Braden's question with inversion entries, when it comes to reversals, I prefer inversion entries because what you're looking for a price to do is come up and violate a bearish gap, creating a bullish sequence. And so you see price come up here and showcase that displacement. The reason I'm comfortable with taking this trade, I want you in your mind to get rid of these gaps and simply look at price. In your head, are you more comfortable taking a long off a steeper tracement after just putting in a low? Or are you more comfortable in price creating a higher low, showing you that, coming up here and displacing a bit more, right? Is this candle more convincing to you that price will go higher, or is this candle more convincing to you, if that makes sense? That's how I kind of view it. When it comes to reversals, even though we're taking a reversal trade, I still want some type of probability, and what always gives you probability, where always tells you that probability is there, price action. And you see price here on the midst of creating a higher low, we see price come up, and we see price just purely off displacement showcase a lot more bullish potential in this move up as opposed to this here, if that makes sense. Now you pair that up with the gaps that we end up taking, which was this 1 minute gap go invert, which was a more displacive gap, meaning had we come up here and seen price violate this gap, we violate a much bigger imbalance compared to this. That drives up your probability, if that makes sense. So that's kind of answering your question. For me specifically, I always void a gap like this because you don't have the most bullish displacement. Like going back to Braden's question, because I just deleted it right here. Right. What you're doing here is you're taking an entry right after putting in a low. What I'm looking for as a trader in reversals is I'm looking for more displacement, right? More displacement gives you higher probability in my eyes, which is what you want ideally at the end of the day. Oh, I'm sorry. Yeah, that's why Loki asked a question, but let me rephrase it. I'm sure you made mistakes on your way to different milestones, but what would you do differently knowing everything you know now? Is it just investing back into prop firms, investing into ETFs, like anything that I should know that is important? Okay, to get to that point, I think, if I'm being honest, the mentality is what's helped me because when I initially first got profitable, I think obviously I was profitable, but I wasn't as profitable as I could have been because my mentality still was not there. I think really slowing down and realizing, yo, dude, I have a whole lifetime ahead of me. I could really just relax, analyze, and just simply take it day by day is what's most important. The reason I've installed the quote unquote 1-0 mindset is because that mindset is for people who need to slow down, like myself too, as well. Because a lot of times, I'm sure, as you guys do, as I've done, we get ahead of ourselves. Oh, if I just take this trade today, boom. If I would just make this much money today, I could make this much a month. No, that's not the right mindset to more so have. I think if I were to tell myself when I first started, it's just to slow down because I always felt rushed because of the fact that I would instill that in my brain. I would always be like, I need to get to this by this point. No. Chat, the craziest thing, here's a fun fact. My biggest winning days in the history of winning days I've ever had were not like, I didn't come into the session expecting that to happen, if that makes sense. Um, my biggest my first biggest day ever was $150,000, I think, or $100,000 on Top Step. I did not expect that was going to happen. Then it was 150K. I did not expect that happening. Then TPT happened. Did I expect that happening? No. Then this happened in April. Did I expect that happening? No. It happened naturally because I simply took it one day at a time and I kept on following my plan, if that makes sense. So the most important thing I would probably say is your mindset. In terms of like an investing standpoint, I think the safest way you could always go, as we always have, or as we have an investment channel in here, is investing in proven assets. So for me specifically, ETFs, and then crypto, Ethereum, and Bitcoin. Right, SPY, QQQ, Ethereum, Bitcoin. Those four things I mainly invest in. Once those offer a severe discount, I always take entry. I don't give a fuck what anyone says. People always on social media are like, oh, Ethereum's dumping this. I don't care, right? if there's a proven asset which has shown you over a sample size or a long extended sample size that it's consistently profitable, where you're seeing price consistently creating new highs, new all-time highs, like a SPY, like a QQQ, like an Ethereum, like a Bitcoin, I always simply invest in supreme discounts. Go back to last April when we had that massive dump last year, April this time. You saw the markets historically dump. Most people were freaking out on crypto, on Ethereum, on Bitcoin, on stocks, on NQ, on ES. I was not. I was actually very grateful because we had a very discounted entry. Because specifically for NQ and ES, we've had over a century, 150 years, however long it's been, of proven data that prices consistently created new all-time highs. Why the fuck would I not invest when it's discounted? If that makes sense. That's simply my mindset. So yeah. All right, I'm gonna wrap this up soon, chat, because I gotta do this giveaway. But a great freaking live. My throat's kind of cooked. All right, y'all. I'm 21, making 10K to 20K a month during sales. Net worth is 170K. Feeling behind comparing myself to you and Brian Destiny after trading since 2020. I have money. Should I risk more than $200 to achieve my goal? No, bro. I mean, dude, here. You know what the fucked part is, Nasdaq? I'm 23 and I still feel like I'm behind. Crazy as that sounds. But I think it's important to make sure that you don't let that mindset. What is this Why are my shoes, dude? You will never ever catch me wearing shoes like this. I think it's important to not get caught up in that mindset. And just simply take it one day at a time. I think me installing the thing that I do in here, Discord, which is that 1-0 mindset, is what's really helped me slow it down. Because like I said before, I feel like I grow the most when I slow down the most. If that makes sense. As crazy that sounds, when I slow shit down, I feel like I do the most. Right. If you want me to be straight up, how will Primo Discord have a better chance of giveaway? If you want me to be straight up, I'm going to go on Twitter, look at the comments, and people I know in here on the Discord, right? I'm going to pick out selectively. Let's go trades. What is the hardest thing? And how did you overcome? I'm either going to do that, or I'm going to just do a spin the wheel and just double check and make sure most are you guys. What was the hardest thing that you did to overcome? I think the hardest thing... I don't know. There's a lot of hardship. I don't know. There's a lot of hardship. That's fucking tough. That's a good question. Hardest thing I had to overcome. I think the hardest thing I had to overcome is when I first started trading, realizing that this is not going to work out for a little bit, right? When you first start trading, it's the biggest liability. But over time, as you improve that skill set and becomes profitable, it turns into the biggest asset. So what most people try to do is they initially come into the market, they go to social media, they see so many traders do super well, and they assume in their head, oh yeah, a couple weeks of work, I should get to that point. This, that. No. You have to put in time and effort, and I think how to swallow my pride and ego and realize that, okay, it's going to take me quite a bit to get to where I need to, but I'm kind of blessed that it happened, if that makes sense. So let's be back at PR. No, not yet. How long will Lanta be providing the service? I'll be here for a minute. Are you concerned because of the mini retirement posted out on Twitter? Chat, I've said this multiple times, you have to realize that post isn't relative to me when it comes to my trading. As you guys know, like, I've been sizing a large sum in order to make what I've been making. That post was talking in reference to my trading. So in terms of that, like, it's I don't know if I want to take a break when it comes to sizing. I've definitely downside since then, but that was talking about that. When it comes to the Discord, chat. Here's the crazy thing. I don't think I'll ever like get off Discord, if that makes sense. Like, I'll never leave Discord because I feel like even if I retire, I'll get bored pretty quick and come right back and, like, at the minimum, go live with you guys. Because I truthfully, like, most times, I truthfully enjoy going live and, like, doing what I do. It's just, like, it makes me fulfilled and it keeps me busy. So I don't think I'll ever stop that, if I'm being honest. Do you ever do options? Yeah, that's what I started off at. I started trading options when I was 17 years old. That's what this Discord would start off. Now, let me show you real quick before I wrap it up. Go to the archive. Chat, remember it's the 1 to 10K challenges. Let me go to the announcements, the old announcements page. Announcements, there, right here. Go all the way back. Let me scroll. 6/5/2022. Been doing this for a long time. But yeah, for anyone in here who chat, if like here's what like if what the moment I stopped selling Lifetime is when you know within like a 6 to 12 month duration, I'll like back off of Discord. The only way I see myself stopping though is if like I like start like a family maybe. That's not coming for a long time. But like if I still have Lifetime up like for pay or for like someone to buy, like at minimum it's a year guarantee that I'm here, if that makes sense. Did you stop or something? No. I don't really stop. I just switch over to futures because the one thing with options is I was already an index trader, so I already traded SPY and QQQ. For me, I feel like if you trade those two, you should be on futures because there's no Greeks, right? As you guys know on options, if you've traded it, there's Greeks and specifically theta, which is a pain in the ass. And like with futures, like everything's very defined. So that's really it. How many trades have I taken a day? Ideally one or two. Sometimes we'll have a bit more. Like Thursday, we had 4. But we have a 1-0 mindset. So if we come into the market, if we capitalize on a good trade, we simply wrap up the day and simply compound our day and take it one day at a time. That mindset's really helped me with my trading, so I just install it in here. Yeah. All right, y'all. I'm gonna wrap it up here. Great freaking stuff. A 47-minute review. Beautiful. I'm gonna upload this, and yeah, I'm gonna have the announcement giveaway in about 10 minutes or so. With that being said, stay safe, guys. We are live tomorrow morning at 9:30 a.m. Eastern Standard Time. Tune in and have a great rest of your day, chat. Peace out.